Warren Buffett, he's probably the most watched investor on the planet, but lately, some of his moves have left Wall Street, well, a little confused. He's selling off his biggest winner and at the same time pouring billions into industries that a lot of people have basically written off. So in this explainer, we're going to decode his secret blueprint to see what it can teach us about where the market is headed.
So if you've been following the financial news, you might be scratching your head. On one hand, Buffett is cashing out billions of dollars from his most famous, most successful investment of the last decade. And on the other hand, he's buying into companies that many people think are, well, kind of boring. It just doesn't seem to add up, right?
So on one side, you've got him trimming his stake in Apple, arguably one of the greatest companies of all time. And on the other, he's buying into oil, these kind of obscure Japanese trading houses, and even U.S. home builders. I mean, what is the master plan here?
So here's how we're going to crack this code. We're going to decode his recent buys piece by piece. Then we'll reveal the classic strategy that's hiding behind it all and lay out a 4-step blueprint that you can actually use. We'll also dig into what he sees coming for the economy and wrap up with the big takeaway for every single investor.
All right, let's get right into it. Think of this like a detective story. We're going to treat each of Buffett's big moves as a clue. And once we put them all together, they're going to reveal the whole strategy.
The first, and honestly the biggest clue, is just the sheer mountain of cash that Berkshire Hathaway has been building up. After selling quite a bit, he's piled up the biggest war chest in the company's entire history. We're talking over $300 billion. Now, this isn't him being scared and hoarding cash. No. In the investing world, they call this dry powder. Buffett was simply stockpiling ammunition, getting ready so he could strike the second he saw real value pop up in the market. And, well, it looks like that moment has arrived. So where's the first place all this cash started to go? Well, it was a sector that a lot of Wall Street had kind of given up on: oil. He quietly started adding millions of shares to his position in Occidental Petroleum. But see, he's not just gambling on where the price of oil is going to be tomorrow. He's looking way deeper. He sees Occidental as this cash flow machine, one that makes billions even if oil is only $60 a barrel. And here's the kicker. It has a foot in the old energy world, but also in the new world of carbon capture. It's the perfect bridge for an energy transition that he believes is going to take decades, not years.
And here's the sneaky part. While everyone was totally fixated on his energy moves, Buffett was making another massive, but much quieter, bet on the other side of the planet.
He just kept on buying into these 5 giant Japanese trading houses. They're called Sogo Shosha. Now, the easiest way to think about them is that they're like the middlemen for the entire global economy. They handle everything from shipping and mining to food and energy. They basically sit at these critical choke points of global trade, and they get to take a small slice of almost every major good that moves through Asia. And this quote just nails it, doesn't it? He isn't betting on a specific product or one hot company, no. He's investing in the essential infrastructure of commerce itself. He's buying the toll booths that just keep collecting cash no matter who's driving on the economic highway.
Back here in the U.S., he made another move that had people scratching their heads. This time, it was a really targeted bet on the American housing market. He bought a stake in a mid-sized home builder.
So you might be thinking, home builders now, with interest rates through the roof? And that's exactly the point. Buffett sees that these high rates have basically frozen the supply of existing homes. Nobody wants to sell and give up their low mortgage rate. But at the same time, you've got population growth pushing demand up. So what does that mean? It means builders of affordable $300,000 starter homes have the only game in town for a lot of young families. He's seeing a replay of what happened after 2008. The final clue, well, it's been staring us in the face the whole time, right there on Berkshire Hathaway's balance sheet. It's what he's been doing with all that cash while he's been waiting.
That cash isn't just sitting in a checking account. Nope, it's invested in short-term treasury bills, and it's earning him around 5%, totally risk-free. I mean, do the math on a few $100 billion, that adds up to billions in interest flowing in every single year. He's literally turned the safest asset on Earth into a powerful income stream while he waits for his next big pitch. Okay, so we've got all these clues, right? The energy bet, these global toll booths, the housing play, and all that high-yield cash. What does it all add up to? How do all these pieces actually fit together?
Well, it reveals something that is just classic vintage Buffett. Every single one of these investments is basically a cash-generating machine that he was able to buy at a good price way far away from all the market hype. This old Wall Street saying just sums it up perfectly. Think about it. If the economy does well, these companies are just going to churn out cash for him. That's the heads he wins part. But if the market tanks, well, he bought them so cheap that his downside is limited. And on top of that, he's got hundreds of billions in dry powder ready to buy more. That's tails, he doesn't lose much.
All right, so this all makes sense for a guy with billions to invest. But what about for the rest of us? How can you actually apply this same powerful way of thinking to your own investments? Well, let's break it down into a simple blueprint.
Here it is. Step 1. Copy the cash discipline. Build up that safety cushion and make sure any extra savings are earning a safe return. Step 2. Hunt for real profits. Look for companies with actual earnings, the power to raise prices, and a fair valuation. Step 3. Watch the capital cycle. Find those starving industries where the survivors are about to feast. And finally, and this is the really tough one, be patient. You got to remember that sometimes waiting for the right pitch is the strategy.
So why all these defensive, value-focused moves, and why now? It all boils down to what Buffett sees on the horizon for the next decade.
Just look at this chart. It tells you everything you need to know about the huge valuation gap he's exploiting. While some of the hot tech stocks are trading at 30, even 40 times what they earn, he can go buy those Japanese toll booths for a tiny fraction of that price. He just flat out refuses to pay for hype.
What this all points to is that Buffett believes we're heading into a period that might look a lot like the decade from 2000 to 2010. A time when the overall market kind of goes sideways, maybe inflation stays a little sticky, and the glamour stocks just tread water. In that kind of world, companies that sell real stuff and generate real cash flow, they're the ones that end up winning.
And this really brings us to the single most important lesson here. Look, the goal isn't to perfectly copy his trades. I mean, the public filings are 45 days late anyway. The real goal is to adopt his mindset.
So what's the mindset? It's this. Keep your powder dry. Hunt for value where nobody else is looking. Insist on companies that generate real, actual cash. Understand that patience is a powerful strategy. And maybe most important of all, be ready to go shopping when everyone else is running for the exits.
And that's really the ultimate question I want to leave you with. Buffett is getting ready right now for that next big opportunity. He's building his war chest. He's got a shopping list. The real lesson from his blueprint is to ask yourself, when that moment of fear eventually comes, will you be ready too?